Alrighty, all I want to go through a few sort of features, settings to do with Volatility Master in regards to um, you know varying volatility from time to time and how you can adjust settings to suit. So let's go back to November and we'll just start up the back tester. And you can see the average, let's just pause it. The average daily range is 399 pips. Let's have a look in December. December, it's a little bit less, 381 is the average daily range. And let's have a look in January. And now it's only 307 pips. So between 300 and 400 pips is sort of the average daily range over those 3 months. And I'm just going to let this trade for a while until it gets a couple of trades in play. And then I want to explain a couple of things. All right. I'm just going to leave it there and I'm going to explain a couple of things. So what we're looking at here is it took out one trade. Once that trade had the profit lock activate and it was a no risk trade, then it was able to open up a second trade, et cetera, et cetera. Now, I just want to show you a couple of measurements. So from the top of this one to the bottom of that one is 400 points. From the top of this one to here is 300 points. So we need him a little bit further so we can measure this one to there. It's 350 points. So between 300 and 400 points from the top to the bottom, from the higher to the higher low, higher. So that's sort of the distance between the range there. And that's quite common based off an average daily range of 300 to 400. I mean, there's no absolute correlation, but the more movement you get in the market, the bigger the pullbacks tend to be as well. So you got more movement, but you've got more up and down volatility as it occurs. And the latest templates that I've sort of created were based off average daily ranges of around about 450 pips. And so if we stop and have a little look in the settings, we'll see that the profit lock kicks in at 400 points. And then the trailing stop loss is at 500. So that means it becomes risk-free at 400 points of profit. But then it would take, if it just activated and then dropped 400 minus 40, 360 points, then it would hit the profit lock and you just take a small profit. So you need to try and allow enough room for wherever the stop loss is so that these little pullbacks don't hit it. All right, unless it's a bigger than average pullback, which is going to indicate the market's turning around. So you need enough leeway between where the market gets to and where the stop loss, trailing stop loss, profit lock, whatever it is going to be. So you need room to allow that to happen. And so in this instance, with this sort of amount of average daily range, causing this sort of volatility. That works out really, really nice. All right. Also, let me just run this one again. I'll just get back to roughly where we were before. And we can see that the take profit, it's just hiding behind that main red line there. But if I zoom out, you can just see it. The take profit's there. So we almost hit the take profit there. And if we just let it play out a little longer, we'll see that it has hit that take profit. All right. And so that's, if we look at the settings, the take profit is 1,000 pips and 1,000 points, sorry. And that's been working out just nicely. All right. Now, what I want to do though now is I want to jump ahead to more recent sort of time. It sort of started on around the 3rd of April, which was the day that Trump announced all the new tariffs everyone seems to want to talk about. And remembering the average daily range as what previously was 300 to 400 points, pips. Ever since Trump announced the tariffs, okay, it's still 370 because this is the day he announced the tariffs. But on this particular day, the market's only just open for the day and we've already got, 560 pips of movement when the average is only 370. So we've already got the highest daily range over the last 20 days. And ever since the 3rd of April, there's been a lot more volatility. I'm going to jump up to today, which is the 10th, and I'll play it. I'll have a look at what the average daily range today is. You can see that the average is up to 533 now because we've been getting a few of these 1200. We've been getting almost every day since he announced the tariffs has been over 800 pips of movement in the markets and some up to over 1,300. And if we just have a look at a few other days, 480. So ever since the 3rd of April, the average daily range has been getting higher and higher and higher. Yeah, and that basically what that means is the market is being more volatile and it's behaving differently than it was prior to that. So the purpose of this video is to show you how to notice that, understand what it means, and give you some ideas on how you can adjust settings to suit. And that's the thing with the markets, they're always changing and evolving. And that's one of the main reasons that I've left Volatility Master with a lot of settings that can be adjusted so that you can fine tune it as things change and also fine tune it to suit your own trading times and styles. So let's just play this through until midday when gold would normally start trading. Yeah, so we've already got the highest daily range from the last 20 days was 565. Already today, and we're still in the Asian session on the 3rd of April, we're up to 688. So already significantly more movement. And normally the Asian session will have the least amount of movement. All right, so it's now the correct time. So it's midday my time, which is when I have the software in the template set to start trading. So it's going to be looking for a buy order. So we'll let it take out a couple of trades. And then we'll do some measurements like we did before. Now, automated trading softwares automate, Volatility Master automates the vast majority of trading functions and manages trades for you and everything. It can be run completely hands-free, but you're always going to get better results by having a little bit of an input, noticing when markets are different, making slight changes. Now, to use even a good software like Volatility Master correctly and getting the very most out of it, there's still a bit of a learning curve. You've got to start to learn what all the different settings mean, how they can be adjusted, when and why they should be adjusted. So there's still a learning curve there. Not as big a learning curve as there is to actually learning to manually trade yourself, but there is still a learning curve there if you want to get the very most out of it. So I'm just waiting for this to take out a trade. It should be about to. All right, so the trend's changed to a sell. So it's looking for sell orders now. What was that? I was saying, so there's still a learning curve to get the most out of it. But when as I said, it's not as big a learning curve as learning to manually trade. But if you spend the time, and it's more time, significant amount of time to learn to manually trade, then you do still need to spend a fair amount of time in front of the charts. You need to be doing your manual technical analysis regularly and watching and waiting, setting alarms ready to pounce on opportunities. And there's nothing wrong with that. But spending not as much time, but a bit of time to get the most out of Volatility Master. At the end of that, you have something that's automating all these processes. It's automatically doing the technical analysis. It's automatically managing your trades, jumping on the opportunities when the market's primed for it, instead of you waiting around and watching and doing it manually. And all you need to do is, look at little things like the average daily range displays, maybe do a few measurements from, not even once a day, and make some slight adjustments to squeeze the most that you can out of it and get even better results. But let's let a few trades open up. But what I want to show you here is the stop loss is just here. And that looks like the stop loss is extremely close. But if we actually measure the distance from the trade to where the stop loss is, it is 650 pips, which is what we have our maximum stop loss set at. And even though it doesn't look like it's that far, but that's because the market has moved so much further that 650 pips appears to be a smaller distance, even though it's not. So now it's moved into profit and the profit lock's kicked in. And we have a second trade open, but then the first trade, it hit take profit. Now look at that. That doesn't look like the market moved far. Remember before, back in January when we did that last back test, and it hit the take profit, like the trade opened here and right up the top here, it hit the take profit. It looked like a bigger distance, but this distance here, now it looks smaller, is still 1,000 pips, 1,000 points. But because the market's been much more volatile, it looks like it. And now that other one hit the profit lock, so just took a small profit on the other one. We're still 1.8% profit up for the day. And just let it play out for a little bit longer. It's open. All right, this is what I want to show as well. It's opened up another trade here. And that trade's in a bit of drawdown. But if we measure it from where that trade opened, you would think the software should have put the stop loss right up here because that's the top of that little peak. Or actually it would have been looking to put it above that red line. But we also have it's set to have a maximum stop loss of 650, which is just there where it's placed it. But it's such a tiny distance compared to how far the market's been moving because of this increased volatility. So like at the moment, the market's moved 825 pips today already. And, we're not even halfway through the day. So if we have a look, we've hit that stop loss. Let's see how high the market goes. And now the market's moving back down again. So what this little bit here tells me is that while previously when the average daily range was smaller and there wasn't as much volatility, 650 pips as the maximum stop loss distance, well, they did. I proved it with back testing that was the best average maximum distance to have. But now with this increased volatility, it's not enough because if we had instead of having it set at 650, if we'd have had it set, let's say at 1200, then it wouldn't have quite hit it. And that trade wouldn't have been a loss. And then it would have still been open and it would have been taking profit. And it would have probably hit take profit by now. And the other point I want to go through here is that this one here, the first one to open, it closed out at take profit right there, which is 1,000 pips. The market's now gone down 5,000 pips since that trade was open. So we only took the first fifth of potential profit because there is so much more volatility at the moment. So what does that mean in a nutshell? That means that the maximum stop loss distance in increased times of volatility should be higher, should be bigger. Possibly look at making the profit lock and the trailing stop losses larger as well. The take profit, because if you're going to have the maximum stop loss at 1,200, you're going to want to take profit at least 1,200 so that it's a 1-to-1 risk to reward. But like in this particular day, we could have taken 5,000 points of profit instead of just 1,000. All right, so I'm just going to let this play out a little bit longer. Going to hit the take profit, and those trades are closed. And we took 2.3% profit, so there was nothing wrong with that at all. But I am going to adjust a few settings here just to show you. And I'm just doing this off the cuff. I haven't practiced it beforehand. But I'm going to put, I could put 5,000 I could put 5,000 points of profit in, but I'm not. I'm going to put 3,000 in, because putting 5,000, that's completely in hindsight. But I changed the trailing stop loss to 600, and I might change the profit lock to 500, so making them all a little bit larger of a distance. And I'm going to make the maximum stop loss, excuse me, 1,300. So I've increased the distances of all of those as well. There's one more setting I'm going to show you shortly, which could possibly be adjusted based off the volatility as well. Now, I'm going to start this and run through. I'll pause it while I get back to where that first trade comes out, so you don't have to watch it all yourself. I'm not quite back to where the first trade gets taken out yet, but I wanted to go through the top and the bottom of the ranges. So the thick red line and the thick blue line indicating the top and the bottom of the ranges. Now, if I was to look at this chart myself, I would say, why is the bottom of the range there? Shouldn't it be right down here? And that's also an issue with this increased volatility. So if I measure the distance from the bottom of that one there to the bottom here, that's 750 points. And likewise up here, surely the range should be here. And I'll measure that distance from the top of that one to the top of that one. And it's, even though it looks very close, it is 500 and, let's say 540 points apart. And I have settings based off the times of lower volatility saying I don't want that to be any, if that distance is bigger than I think 100 or something, then it doesn't count this one, it uses this one. And that's because when the market's less volatile, it's not often that the market, well, in those times of less volatility, like end of last year, earlier this year, up until the 3rd of April, pretty much, then, that 100 point, that's the second peak preference setting, is what averaged out as the best. But now in times of increased volatility, you might want to look at increasing that second peak preference figure so that it can incorporate, maybe not this one really, but particularly this one. I would think I would be wanting it to show right up here. So you can increase those second peak preference settings as well, and that will increase the distance between one peak and the other, and allow, so if I increase that second peak preference to, what did we measure this one at? If I increased it to 550 pips, then the top of the range would be displayed at the top of this one, not the top of this one. All right, so I'll just let it keep playing out. So that was the other setting I wanted to show that you might want to look at adjusting as well. So now that we have a larger profit lock, trailing stop loss, a larger maximum stop loss, and a larger take profit to suit this increased volatility, we will see how much extra profit we make for the day. Remember before on the default, not the default settings, but on those template settings, we still made 2.3% or $2,300. So you wouldn't be complaining, but it should take out the first trade about here. All right, there's our first trade. And see that the stop loss is a lot further away this time. We still actually hit our profit trailing stops there, which was a bit of a shame. let me just pause this here. So from here to here, there's a lot more volatility. So looking at that there, that's just the length of some candles. So I wouldn't want profit locks and trailing stops getting hit just all in the one candle like that. So on this big volatility, I'm looking at, I still don't want the profit lock to be too big, but I'm going to make the trailing stop loss, significantly larger. And these were the second peak preference for the initial trades, and for the stop loss calculation as well. So I would adjust, make them larger in times when the volatility is a lot higher. Sorry about my kid yelling in the background, but I'll fast forward to where the first trade comes out again. Yeah, that'll do. All right, so it's just opened up its first trade. And by increasing the trailing stop loss, I'm hoping those three big candles that we're about to see, that one still hit the profit lock, but it didn't hit the first trade. Okay, and already we've made 3.5%, and we didn't actually even hit the first take profit. We set the take profit at 3,000. The market only moved 2,400 before it had made 3.5%, which it stopped because that's what I had my goal set at. But that was about where we stopped the scenario before, because the market had moved 5,000 pips. That's only 4,000. It must go down a little bit further. Yeah, so right there was where we stopped before. So the market had to move that far to make 2.3%. But on those adjusted settings to allow for more movement, more volatility, we made a lot more than that by the time we got to here. We could have easily made, I don't know, probably 5, 6, or 7%. So 3 times as much as we did previously. I'm going to have to do that again and just see how much we could have made. I'm going to bump that up to 6%, which in anybody's language would be a huge day. But I'll just pause it again until we get through to that first trade, and we can all watch it from there. So we're just about at the first trade. Now I will be looking at using this ADR and the daily ranges and all of that. I am going to be looking at putting that into the logic of the EA so it can automatically adjust the settings I've been discussing here today, so that it will automatically adjust those settings based off, so the EA will then be able to determine beforehand how volatile the market's been and adjust those settings to suit. I'll probably bring it in stages so that it automatically adjusts take profits, and then it might adjust profit locks and then the second peak preferences and factor all of those in. But yeah, so that's what I'll be working on doing next. Unfortunately, the market tapped out the trailing stops just there, so maybe the trailing stop needs to be a little bit further off. But that's what I've been going to be doing a lot of lately, a lot of this back testing and measuring and working out exactly what ratios I need to set those settings we've been talking about off based off what the ADR or daily range and all that is. But anyway, yeah, we made 4.7% because our trade got tapped off on that little movement. But if I adjusted the trailing stop loss to a little bit more than what I've got there, yeah, so that's probably a little bit too far away to be practical most of the time. But as you can see, that changing those settings made a big difference. So I have been mostly, and most people have still been using the template settings and getting, well, since the 3rd of April, we've been getting better than average results for sure. But we've left so much money on the table still. So making setting adjustments like we've discussed in this video would have doubled, probably tripled the profits that we've made during this times of increased volatility. Anyway, I just wanted to go through and discuss them and let you know I am working on incorporating all of that into the logic so that you don't need to make those adjustments yourself. But there's always going to be settings and things you can do manually to improve performance. This just happens to be one that I think I can fully automate. So keep an eye out for those updates. It could still be a while, but anyway, guys, that understanding that is definitely going to help you out. Talk to you all later.